Hey everybody, what's up? Quick update today. It's Monday, so I'm busy putting together the new issue, this week's issue of MMT Trader. If you like that, if you want to get that issue, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. In the meantime, you could check out the back issues. That'll be out later today. American Rail Car, symbol ARII. This is a stock that we had in our MMT portfolio, up 50% today. 50% today. This is a stock we bought just below $41 a share. It is up to $69.95 because it is being acquired. So that's a 50% gain today. It is over a 70% gain for us. We are taking profits in that. This is the type of action and recommendation and information that you get from MMT Trader. It is not just a macro outlook. I give stock recommendations in there. Dollar index rally today. We are again flirting with that 96 level. I think it was about 5 days ago, we got up to 96.15. So we're back up to 96. We spent most of last week on the 95 handle. You know, I made that video about that. The high for the move since March has been 96.98 in this corrective move. So we're still in this range, you know. 95 basically up above and below 95. It's been bouncing around here since June. I mean, basically 95 has been the level. Sometimes it goes above 95, sometimes it goes below 95. I think in September we got down in the 93 handle. Now we're back up to, flirting with 96. So we'll see what happens. But I stand by my outlook, which is negative for the US dollar. And if you look for the reasons, the rationale, I mean, go out there, look at the commentary, look at the analysis or the analysts, what they say, market observers, what are they saying? It's the same story again. It's the interest rate story. It's the interest rate story. We know that is not applicable. 8 interest rate hikes and the dollar index is below where it was when the Fed first started to raise interest rates in December 2015. The dollar index was at 98 and change. And even with this rally that we've seen since March, it's at 96. You had 8 interest rate hikes. I mean, when is it going to apply? When are the higher interest rates? I mean, by now, if that interest rate story was correct, and given not only where U.S. interest rates are relative to other major currency interest rates, but the fact that the Fed's policy outlook is very hawkish. I mean, you'd think the dollar index should be at 110, at 120 by now. All right? We have the highest bond yields in 11 years or something like that? So, I mean, if you're going to stick with the interest rate argument, it is a very flimsy argument, in my opinion. You've had 8 rate hikes. You have a Fed with a policy position right now that is very hawkish. You really have no other central bank out there talking about this, except you might get an interest rate hike from the Bank of Canada this week as expected. You're going to have the ECB on Thursday talking about, they're not even close to raising interest rates. So 8 interest rate hikes. 8! 1, 2, 3, 4, 5, 6, 7, 8 interest rate hikes. And the dollar index is below where it was when the Fed started the interest rate hikes. And if you look at individual currencies, the dollar yen was at 121 when they started. It's at 112 and change today. The euro was at 109. It's just under 115 today with all the political turmoil, right? Italy's going down the drain. They're not approving the budget. They're going to break away, all this stuff. 109 to 115. All right? And I can go down the list. I can basically go down the list. So that's, you know, that's the reality. I mean, you could kind of put this in your head any way you want. It's interest rates and it's bullish for the dollar. But I mean, if you are going to speak in fact, as opposed to some story, as opposed to some fantasy, you have to acknowledge the fact. Sorry. It's just the way it is. And of course, bond market, I called that. I said in December 2015, you got to be short treasuries. Interest rates are going up. Remember the line? The line, oh, it's not going to break the line. It's not going to break the line. 3%. I told you. It's going to go above 3%. The 10-year yield is going to go above 3%. The line. The candlestick. The cup and saucer. The head and shoulders. Come on. When are you going to listen? So 50% gain, over 70% gain for us in American Railcar ARII. Acquired today, up 50% in one day. How about that? A lot of other stuff in the report. What's going to happen to oil prices? Go back a couple of weeks. Look at my video here. I called the top. I said the top is in. Go check out the videos on this channel right now. Go back and look at the video I made a few weeks ago. Everyone was saying $100 is coming, $100 a barrel. It was at 76. I said the top is in. What's going to happen now? You want to know what happens now? Go to my website, sign up for a 30-day free trial, no obligation, of MMT Trader. And don't forget, I have Zombie Trading on there, my Forex signal service, daily trades. Yes, it has stop losses for all you people who need the comfort of those stop losses. And it's based on zombie behavior, which I absolutely know how to predict. I mean, it's very easy to know how the zombies are going to behave. Very easy. Very, very easy. And like if you are a poker player and you know the cards that somebody is holding, you can beat them every single time. So this is the same thing. It's based on the same exact principle. We know how the zombies are going to behave. We front run the zombies and we take their money and get out before they die. Very simple. So it's all out there, folks. It's up to you. By the way, I got another really, really nice email from a subscriber today saying, Mike, you helped me out so much. In the past, I was one of these traders who, you know, I was getting chopped up. I was making money. I was losing money. I was stopping myself out. And then you taught me about paying with time. You taught me about the meaning of time. The market doesn't ask for your money. Most people just give their money voluntarily to the market. Whereas I explain about paying with time. You know, folks, a lot of you talk about it's all about timing. It's not all about timing, it's all about time. And when you understand the distinction between timing, those of you who are trying to be so precise and exact, very, very rigid in your trading, thinking that you can absolutely time something and be so exact and precise, and your lines on your charts and your this and your that and your pattern. It's not about timing. It's about time. And once you understand that, it frees you, it releases you, it liberates you to operate in absolute calmness, in a Zen-like state, without stress, without anxiety. But when you don't have that, you are operating with a rigid approach to the market, thinking that if you can be so precise and minute in the calculations and down to the last, where are you going to put your stop? 5 ticks, 10 ticks, 50 ticks, 100? You don't know. See, so you're constantly operating and trading from a point of view of maximum of uncertainty and minimum self-confidence. I eliminate all that. It's not about timing. It's about time. Bye, everyone.